Well, you never get a breather in the world's largest casino. What an absolutely crazy start to a brand new trading week, and I also suppose the conclusion to the trading month of March, where I very much hope you crush it, and here's to an even better April. If you missed the intraday action today, it was wild. We hit a brand new year-to-date low, and as soon as we did that, we ripped from bottom left to top right, 2% gain. It just never looked back. In this video, there's two major things I want to talk about. I want to talk about how you could have known before it happened that it was a classic bear trap, and then I also want to talk about what to pay attention to for the remainder of this week, because the fun does not stop here. But before we get into all that, if you enjoy these type of market breakdowns, let me know by hitting the like button. Don't forget to subscribe and say what's up in a comment below. With that being said, let's rock. When the dust officially settled on the day, here was the headline. S&P 500 closes higher Monday after briefly touching a 6-month low. But before we got to that, if you got up early this morning, getting your coffee, prepping up your trading plan, you might have been looking at the Asian markets and you realized that the Japanese equivalent of the S&P 500 was getting clocked. It was down 4%. You might have been looking at gold in the futures market hitting a new all-time high. And then as soon as the US stock market opened, we hit a brand new fresh low year to date, and also in the past 6 months. It was brutal, and it was all because of this. The Trump team weighs broader, higher tariffs back on the table ahead of Wednesday's deadline, and across the board a hike of up to 20%. Now, of course, this is going to be very, very, very important mid this week, April 2nd, Liberation Day. But before we talk about that, I kind of want to show you what's going on. We dipped early this morning, and then around 9:45, we just started ripping and did not look back. And we actually ended the day in the green. The SPY up about 0.7%, while the Qs were pretty much break even. This was phenomenal after a pretty large gap down. So this goes without saying, but obviously when the market went dingity ding 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 to start the day, there was a lot of uncertainty and questions, and no one knew what in the hell was happening with the trade war. We see gold ripping, we see other markets falling, and just to add a little bit more fun, a giant JP Morgan position expired today with respect to the overall market. Huge options position just adds more fuel to the S&P 500 volatility, and that it did. When we opened up the market today, you could see a giant 37,000 contract position. They were long puts at 5565, and this was the protective side of their overall collar position, if you care. But what you need to know is it made a lot of negative gamma. Remember, negative gamma is slippy price action, while positive gamma, more of the purple, is kind of sticky price action, if you will. But anyway, throughout the day, you can see we kind of dipped at first, dip, and then we just started to pump, and the negative gamma does what negative gamma does, and we started to push, and when we pushed, we really pushed. And what I find interesting here is I thought it was going to kind of get pinned to that level, but in all reality, we ended up shooting above it and closing, surprise, surprise, right in positive gamma. But I just wanted to show you that that position officially expired today, and it sat there until the end of the day. And once again, it was just their protection leg. But when you have a position of such size, it has a huge impact on gamma. I mean, look at this giant negative gamma node, which has a massive influence on how the market makers, the people taking the other side of the premium trade, how they have to hedge their books. So very useful. And just so you know, they already, at the point that I'm filming this, rolled their new position out for Monday, June 30th. So we're going to be running this game plan back, obviously, in a couple months. They do it every single quarter. Now, this is one way to look at options. The other way to look at it is right here. And you can see right at the start of the day, pretty much around 9:45, 9:48, you had a huge amount of puts being closed out and calls being purchased. And then the puts trading kind of stopped, but calls kept being bought, pushing the delta up pretty high, which is what you're going to normally see when these types of bottom left to top right days. Now, with this being said, when we opened up, not knowing where the day was going to go, this looked brutal. We were making a new year-to-date low, so you might be wondering, okay, was I supposed to know this was a bear trap? How is that possible? And first of all, the answer is yes. You could have known it beforehand. So just to kind of show it to you, at 8:20 this morning, I do this for all the members of the Discord. I put it in the Coffee Thoughts channel of just what I'm thinking in the morning. And I want to highlight this line right here. I think there could be a 0 DTE bear trap set today, and boom, that was in excess of an hour before the market opened, and right there, we dipped, we made that fresh low, trap set, and then we exploded. Now, what could we have seen in the market that that was going to be a trap before open. And it's honestly just understanding the implications of what happens when you have one giant position that then has to get rolled to another giant position. And if you look at the history of these days, basically, it seems like whatever that first big move is, you just get whipped completely the other way. So things were already pretty bearish, and there's just so much negativity, bearishness, uncertainty going into this. I start to think, hey, when one side of the boat, the bear side, gets a little bit too many people, gets a little bit too heavy, well, that's the group, that's the trade, the overpack trade that ends up just kind of getting screwed over. And then obviously, just because it's a guess doesn't mean it's going to happen. But then when you see the options flow this strong, that kind of gives you confidence that, oh yeah, this was the trap, because look at how strong this delta movement was. You got to track options. I think it would be truly impossible to be a long-term successful trader in the current environment without knowing all this options positioning. So beyond calling it out before the market even opened, beyond showing it to you in real time, yes, I put my money where my mouth is. You can see here, Piper fired off early in the morning, my trading system around 10:30, bullish, 5 out of 5 confidence, posted it at 10:31. That hit, the minimum unit size was 46. Of course, you could scale it up to your heart's desire. That returned 100% of the premium, which was $114. I took a little bit of a different trade. Coming into the day, I had a lot of puts, got out of those lickety-split early this morning, and then I switched it over to calls, and I was able to lock in a nice 57,000. Of course, all this stuff is posted in real time to everyone in the Discord. The Discord, your entire first month is free. You get all of my trades, the Piper signal, all the other members' trades, a lot of previously filmed private lectures. There's a lot of great info in there, and I don't want anyone to feel like they got. That's why the entire first month is absolutely free. You get access to everything. If you like it, great, stick around. I think you're going to find an immense amount of value. But if it's not for you for whatever reason, don't worry about it. No harm, no foul. Just cancel your account within the first month, and you don't have to pay anything anyway. And even as a freebie, I still give you these weekly newsletters. It comes to your email inbox every single week, where I break down the previous week, all of the earnings, all the major macroeconomic events. But most importantly, I give you the seasonality for each individual day. And you can see coming into today, historically, to conclude the month of March, the bulls have won this day 70% of the time over the past 27 years with a massive profit factor of 7.5. So the bias was very bullish. So this is what your hypothetical equity curve would look like if you bought at open, sold at close. This is a day that dominates by the bulls. So I get it. When we opened today, things were scary, but understanding that we had the JP Morgan position to contest with, we had negative gamma above, we had a lot of puts being closed out, and today is dominated historically by the bulls. It wasn't that crazy of a big brain play that we might have a nice reversal today, and that's exactly what we got, which is also fortunately how I was able to bag more than I used to make in an entire year. So with that being said, we have a better idea of where we've been, but now we got to talk about where we're going. And the big word of the show, as it's been, is uncertainty. Frustration and fatigue hit stock traders in run-up to tariffs. We're going to find out about this on Wednesday, and people are preparing. Hedge fund turns defensive amid tariff chaos, selling tech stocks at the fastest pace in 6 months, and it's even going to the larger economy. Of course, first quarter GDP growth will be just 0.3% as tariffs stoke stagflation conditions. Remember, stagflation is the really bad word. Like inflation's bad, stagflation's even worse. It's when you have inflation and the economy is also getting hit. It's kind of the worst of both worlds. So here's what you gotta pay attention to next. This Wednesday, April 2nd, President Trump will be giving us an update on the trade war. Trump to unveil country-based tariffs April 2nd in the Rose Garden. I want to be clear. I do think that there's still going to be some uncertainty in the system after this, but I still think in a generic sense, a lot of our questions are going to be answered, and that's what the market likes, taking the uncertainty out. And that's why I actually think that this event, maybe a day or two after, could be extraordinarily bullish. I should add on a little bit of a caveat, a little bit of an asterisk. There is, of course, some non-zero chance that there's a surprise announcement that's way worse than any of us ever anticipated, but I don't think that's the high probability setup. Remember, when it comes to the market, you're looking at various high probability and low probability pathways, so generally you want to consider them all, but also realize that they don't all have the same chance. So anyway, coming back to this Wednesday, I think a lot of uncertainty is going to be removed from the system. Not all of it, but I think that's what the market's going to finally like. And if you look at the technical setup, this could be a classic just double bottom. We could have have the very classic sell-off, lower highs, lower lows, a bounce that people say, oh, it's a dead cat bounce, a failed bounce. We snapped the trend line, we puked, we opened up weak, the market wanted to buy it anyway. I think we really are setting up for a beautiful April, even potentially a beautiful May. Remember, from a seasonality standpoint, April is a very bullish month. And not only do we have a bullish month, but we might be removing all the uncertainty related to the trade war, and then we're even still getting those progressive steps with respect to the ceasefire of Russia and Ukraine. So putting this all together, none of it is a guarantee. But as I've been pitching to all of you for the past couple weeks, I think the official bottom is going to be somewhere between the March monthly expiration and somewhere this first week of April because of Liberation Day, and we're kind of on track. Now, of course, this is by no means a guarantee. We're just talking about high probability pathways, but what I am looking for is maybe a little bit of a stall out a day or two here this week, but I think between Wednesday and Friday and really the start of the next week, we're going to start to see that recovery mechanism. And I'm personally going to try to get into it a bit early, but from a technical perspective, you would kind of know that the party's on when we take out this recent high from Tuesday the 25th around 5,787. That would be like your true technical indicator of, oh, we took out that high. Maybe we are going to be revisiting closer to 6,000, maybe even more. But as I've been saying for weeks now, down, 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 somewhere between the March monthlies and the first week of April. That's what I've been calling out. And I think we're going to have a very bullish push into the April monthlies. I believe as of now, as I'm filming this, that is the highest probability pathway. Of course, if anything changes, I'll let you guys know. But the telltale sign I need beyond just these technical breakouts is I need to see the options market flip. Right now, if you're looking at the 0DT, the remainder of the week, the remainder of the month, whatever time frame, they're all put dominated. I need that to switch. I need vol to get crushed. I need the puts to be capitulated, maybe a little bit of a Vanna rally, but we need the options chain to go back to being call dominated, which as of right now, we are not seeing, but this stuff can flip on a dime. So as soon as I see it, I promise to let you know. That's what I have for you. It's going to be a very exciting week. Be careful, expect large moves, play with your proper unit size. Don't get over leveraged and do the dumb stuff you promise yourself you're not going to do, but you do it anyway, because if you could get it on the right side of this move, man, oh man, is there going to be enough money so you don't have to take outsized risk right now. You just got to wait for that perfect setup. Anyway, that's what I have for you. I appreciate your time. I appreciate the good vibes. I'll catch you in the live stream tomorrow morning. Remember, Monday, Friday, 9 to 11. You can see me degenerately trading my own money and hang out with a group of like-minded traders, or I'll catch you in the Discord. That's what I have for you now.